we are buying a ridiculous amount of pre-1933 gold coins. A ridiculous amount. Thousands and thousands and thousands of them. And I think that silver should be reclassified strategic. It should not be industrial. It is needed. It is depleting. And you can see by the draining of the exchanges that the sophisticated traders around the world understand this. And again, if 45 million ounces stand for delivery off of COMEX in December, ask yourself, who's got that kind of money to buy 45 million ounces of silver and take delivery? Now, it's not all one person, but you're seeing massive deliveries. And this is indicative of the awareness that whether we go to a bimetallism world or just the realization that gold and silver are true money, it's happening.
In today's news recap, Goldman Sachs now sees $3,000 gold only next year as fewer Fed rate cuts slow 2025 price growth. Gold's record-breaking rally will slow down this year, with the yellow metal taking longer to reach the $3,000 level. But steady central bank demand remains a key long-term price driver, according to a leading investment bank. Goldman Sachs Group Inc. announced on Sunday that it no longer expects the gold price to reach $3,000 per ounce by the end of 2025, with the Federal Reserve's shallower rate cut path pushing the forecast to mid-2026. Goldman analysts, including Lena Thomas and Don Stuyven, wrote in the update that slower monetary easing will likely depress demand for gold-backed exchange-traded funds, ETF, in 2025. They now project the spot price to top out at $2,910 per ounce by the 2025's fourth quarter. The analysts added that weaker than expected ETF flows in December, driven by easing uncertainty after the U.S. election, also resulted in a lower starting point for gold prices into the new year. Opposing forces, lower speculative demand, and structurally higher central bank buying have effectively offset each other, keeping gold prices range-bound over the past few months, the analysts wrote, but added that demand from central banks will remain a key driver for prices over the longer term. Looking ahead, we forecast monthly purchases to average 38 tons through mid-2026. Goldman's economists now expect 75 basis points of interest rate cuts this year, down from their previous prediction of 100 basis points. The updated forecast is still more dovish than current market pricing as the bank sees underlying inflation trending lower. The analysts also said they were doubtful that the incoming Trump administration's policies will necessarily lead to higher interest rates. Now, we'll show you more clips, but first, subscribe and turn on notifications so you do not miss out our daily recaps, and check our NordVPN offer if you're a serious stacker, because keeping your browsing data safe from the government will be crucial moving forward. Also, check goldsilvermerch.com to get your gold and silver gear today. Premium quality shipping worldwide by Stackers for Stackers. Enjoy the episode.
Yes, the great taking. It could be what Andy was talking about in the ETFs. They could take the gold from the ETF or the silver. And
it is a security.
Yeah. And I think there was it when... I think it was when SVB, or it could have been, I think it was in 2008, there was a collapse of an institution, and JP Morgan, they were given the assets of the clients.
That was Bear Stearns.
Yeah.
No. Oh, yes. I don't know if it was Bear, but the JP Morgan example that you're talking about, that's what stood the court case. So that's what gave precedence to what David Rogers was saying, that it's already met precedence.
And the great taking is something they've been preparing for it since the 70s by taking away the physical paper stock certificates and putting it all in the DTCC, and it's all digital. So I mean, it's something that's possible. He sees it like if there's going to be a great deflationary collapse, this great taking would be used to collateralize the banks again. That's why you have to have a little bit or a lot of physical gold and silver, because they can't take that from you. And the other thing about the great taking, it's not just assets. Well, it is assets, of course, but it could be your house if you have a mortgage on it. So if you're going to have a hard asset, make sure it's not encumbered by debt.
Right. You know, typically precursors, it's like the contrarian. As things are being drained at the highest level, the retail side people are missing the value that is there. And it's hard when they hear people like me saying it all the time, but I've never seen anything like this in 35 years, ever. And Richard Russell always used to say that the Fed has two choices: to inflate or default, inflate or die. And so by devaluing the dollar, you make paying off the debt a whole lot easier, and your balance sheet is then you're offsetting the debt on the balance sheet. So it's gotten to a point, Dave, where either they default or they inflate.
In today's news recap, silver won't lose its luster long term despite economic headwinds, Bank of America says. Silver prices could see headwinds in the near term due to broader economic uncertainty, although the metal has received support from global consumption outpacing supply, according to analysts at Bank of America. A stronger U.S. dollar and weak industrial activity has placed pressure on silver recently. While President-elect Donald Trump's plans to impose strict import tariffs on Canada and Mexico, key suppliers of the metal to the U.S. have threatened to dislocate silver markets, the analyst said in a note to clients. However, silver's price has hovered at around $30 an ounce over the past 9 months. The analysts, led by Michael Widmer, argued that, in their view, this resilience has been tied to consistent silver market deficits, with limited mine production growth, a key source of price support in particular. Global consumption of silver outpaced production of the metal in both 2022 and 2023 and is expected to have done so yet again in 2024, research from Bank of America found. They estimated that over 37,000 tons of silver will be consumer this year, down by 0.4% from the projected amount in 2024, while output is seen edging up by 3.5% to 33,000 tons. Despite the change, the silver market would remain in deficit, a trend the analysts anticipated will continue into 2026. The silver market has been in deficit for a while now, and those shortfalls finally count, the analysts wrote. They noted that this support has been mirrored in some regions, with silver trading at a premium in India and consumers in China having to pay up to source ounces. As a result, silver has solid fundamentals, adding that they are constructive further out on the metal. Silver won't lose its luster long term, they said. Now we'll show you the best clips from the latest interview, but first, subscribe, and turn on notifications so you don't miss our daily recaps. Also, check out our NordVPN deal. It's the fastest and most reliable VPN on the market. If you're a stacker, this is a perfect fit for you because safeguarding your internet data from government surveillance will be crucial moving forward. For a small cash outlay, you can ensure you're protected from prying eyes. Check the link in the pinned comment and get 3 free months today.
Funny how they got it right down below 29 at the close. I don't know. If I had to guess, I'd say $32 at the end of the first quarter.
On the high side.
Yeah, I think it could very easily be there. I mean, I don't know, man. It's just a guess. What good does a guess do?
Nothing.
You know, I don't know. I think
Mario,
silver
any guesses
is
for you?
way undervalued and should be way higher, period.
I think we'll be above 30. That's all I can say.
Well, we're already above 30. That's not much of a guess.
Yeah, I saw the last quote was below 30, the ticker I look at, but we're going to be above 30 at the end of the first quarter. I'm being, I guess, um, conservative, but like Andy said, it should be a lot higher. I think, and we've been talking about this for a few years, but I think things are getting really interesting under the surface with all this physical delivery for silver. So, yeah, I'm going to go out on a limb and say that we're going to make new all-time highs in silver this year.
If you're buying 1 ounce gold bars, I would always get them in an assay card, or any really, even all the way up to a kilo gold bar comes with an assay card typically. But if you're buying gold bars, you might as well get them assayed. If you're buying gold coins, it's lipstick on a pig. If you're buying brand new gold eagles, whatever, the assay is irrelevant. Some people will package them in aftermarket assay cards. But if it's a gold bar like a Pam Swiss or a Valcambi or any of the Swiss bars, they're already assayed. So it is nice to have them in assay cards. Ironically, one of the only counterfeit bars I've ever seen was a 10-ounce bar in an assay card. So we can still check it through the assay card, but the average person wouldn't. So, I think that if you're buying 1 ounce gold bars, don't just buy uncarded bars for a few bucks saving. Buy the assayed. But short of that, I don't see any need for it. I don't know. I mean, no, they've sold almost all of their gold, if not all of it. And maybe I guess you could see, and this won't happen, but I mean, you could see them nationalize the mines and hold all of the gold in the ground for the Canadian people, which wouldn't be the dumbest thing ever. But I don't think that will happen. I don't see any immediate correlation between Justin Trudeau stepping down and the effect on precious metals, other than maybe he oversaw the selling of all of their metals, which is just another stupid decision made by a stupid politician.
What do you think of today's episode? Do you agree with the insights shared about the situation of gold in Fort Knox and the state of the crypto markets? Is the gold in Fort Knox truly secure, or do you think it's just a relic of a bygone era? And as for crypto, are you bullish on its future, or do you see it as a speculative bubble waiting to burst? Share your thoughts and strategies in the comments below. Your input sparks some of the best discussions in the community. Don't forget to check out goldsilverstacks.com for our Stackers Handbook, or grab some premium quality merch to represent your passion for gold and silver at goldsilvermerch.com. Designed by Stackers for Stackers and shipping worldwide. Everything helps to support our channel, as we don't sell you gold and silver or have any sponsorships. Thanks for tuning in now. Watch this video right here because it's a perfect fit for you, and I'll see you on the other side. Keep stacking.